Now, South Africa has joined 130 countries in calling for the introduction of a global tax. Yes, a global tax. It's aimed at, among other things, finding an equitable way of taxing multinational digital businesses like Google and Facebook. Many of these businesses do not pay taxes in the countries where they operate. Well, more on this, we're joined by tax expert Dilip Garach. Mr. Garach, good afternoon. Welcome to the Midday View on eNCA. Global tax, some people will say it's about time because it's been mooted for some time that maybe some of these big multinationals are getting away without paying tax in many jurisdictions.
Yes, good afternoon, Dan, and thank you very much for having me. Yes, certainly it is a proposal that is welcomed. Certainly the global minimum tax is a proposal that has been put forward by the OECD, and the OECD is the Organization for Economic Cooperation and Development. It is an organization that works to build better policies for better lives, and that's what we're really looking at. And I really believe that for far too long, these multinationals, what they've been doing is that they've been doing business across the globe. However, their operations are based in areas that are considered as tax havens, or their head office in tax havens. And as a result, they pay little or no tax. Now, there are 10 countries around the world that the actual tax is zero. So many of these multinationals find their way into those kind of tax havens, and they pay little or no tax. Yeah. So what the OECD and these 130 countries are doing, they want these multinationals to pay a fair share of their tax. So
yeah, especially these multinational digital businesses that since the advent of the pandemic, for example, many of us are now consuming the likes of Netflix, and we're using a lot of Facebook to communicate virtually, the Zooms of this world and the Amazons. And that's one pillar, I understand, for these new proposals. But there's the aspect of sharing in this tax thing, these various countries. Who sets the tax rates?
Well, certainly the OECD is busy sitting around and trying to establish what would be a fair and an equitable tax rate. So what they have come across is that they've decided that the effective minimum tax rate should be 15%. So the countries will go along and will abide into this 15% minimum tax rate that these multinationals will have to pay. So it's all about, like you pointed out, it's not all about where your operations are based or where your head office is. It's all about where the sales take place. So that is the first pillar. The second pillar is all about the actual tax. And what they're saying is that the minimum tax should be 15%, and that is what they're advocating.
So in South Africa, how would that be made effective? Does government or parliament in South Africa have to pass a particular law or regulation to enable SARS to begin to collect that effective 15% tax, for example, from the sales that Google and the likes are making in this republic?
Yes, very much so. It normally is a proposal that is put forward by Treasury. It has to go to Parliament. Parliament will then approve it. Ultimately, it is administered by SARS. So SARS is only an administrative mechanism. However, Parliament must approve it.
Yeah, I just wonder how much South Africa is going to be able to collect. And firstly, how quickly it's going to have to move. We're going to have to speak to SARS. We're going to have to speak to SARS to find out from Mr. Kiswetter what they are doing now after this global tax agreement. So, in theory, South Africa and other markets where they have not been paying tax, they are going to benefit. The fiscus now is going to benefit directly from the proceeds in South Africa of those multinational global digital companies, for example.
Yes, very much so. So in other words, there are two taxes that really apply. One is this minimum tax that they're referring to, which generally multinationals were not paying. And remember, in South Africa, they have to pay VAT because VAT is borne by the consumer, and ultimately that VAT is paid over to SARS. So SARS was collecting VAT all along in terms of Google and Facebook and so on. But they were not collecting the other aspect of the tax, which is the direct tax. So one is the indirect tax, the other is the direct tax. So it was the indirect tax that was being collected, but the direct tax was not collected. But just to come back, this is quite a process. They have to undergo a whole lot of hurdles before this tax gets introduced. And we're only expecting the tax to be introduced in and around 2023. So we still have about a year or two before the tax actually gets introduced.
And there's likely to be lots of negotiations, I guess, very briefly, give and take, because we're paying VAT here, but maybe don't level this amount of tax for us. Thank you very much, Mr. Garach. Dilip Garach is a tax expert, just shedding some light there for us about this new global tax that over 130 countries who are members of the OECD have agreed that they will introduce this global tax. There's still some way before it becomes effective in South Africa, including a process that will include the National Treasury and SARS. We will keep tabs on it because this is going to certainly be good news. Every little bit counts. We need more of this revenue here in this country as we seek to rebuild our beautiful South Africa. Now, President